is Monday, January 27th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Alan Bush, ADMIS Senior Financial Economist, and Mark Bowman, ADMIS Senior Market Analyst. And starting with the financials this morning, Alan, particularly the stock market, or the stock indexes, which are sharply lower today. What's going on this morning, and do you think this can continue throughout the week?
So we are seeing some pressure in stock index futures, and this seems to be linked to the potential that the U.S. may be falling behind in the AI situation. So that has adversely affected stock index futures today. In fact, some of these markets gapping lower, especially the S&P and the NASDAQ. So this, I think, is a short-term negative. I think ultimately, though, it will be the bullish influence of the Fed easing credit this year that will bring this market back. But right now, we have to get over the what some analysts are considered to be shocking news as far as the ongoing developments in the international AI situation.
And Alan, looking at the interest rates, has the outlook for Fed policy in 2025 changed? What do you see there?
It has actually changed quite a bit. Just last week, the feeling was that the Fed would be cutting rates at the June meeting by 25 basis points. That has changed now. It now appears that the Fed will be cutting at the May 7th meeting by 25 basis points, and there may be an additional rate cut in October. So the chances of the Fed becoming more accommodative, a little more pronounced, with traders thinking 2 rate cuts possibly, and a bit sooner than some had anticipated.
Lastly, Alan, what reports will traders be looking to the rest of the week?
Okay, so as far as major reports, on Wednesday, of course, we'll have the Federal Open Market Committee with the statement released at 1 o'clock Central Time, and then at 1:30, Fed Chair Powell's press conference. And then on Thursday, the fourth quarter GDP, and that's estimated to be up 2.7% on an annualized basis.
Thank you, Alan. Mark Bowman, some of the soft markets have been very active this year. What key reports do we have to look forward to in the softs?
Well, starting with the in the sugar market, the Unica bi-monthly report on Brazil Center-South sugar production should be released this week. They normally come out just ahead of the end of the month and just ahead of the 15th. The last report showed production for the second half of December at 63,517 tons, which was quite low. It was down from 380,000 in the first half of the month, but also was down 73% from a year ago. Now, cumulative production for the 24-25 marketing year, which goes from April to March, is now down around 5.4% from last year. We've seen seasonably rainy weather in Brazil over the last couple months, which shuts down harvest and crush season, probably for, well, at least for last year. The wet weather, though, is also improving the outlook for the 25-26 crop after the extreme heat, drought, and also wildfires last fall that had lowered expectations. In the coffee market, we've got, we're looking for possibility of more forecasts, private forecast for the 25-26 Brazilian crop over the next few weeks. The Brazilian drought has lowered expectations for the 25-26 crop, and we've seen some revisions lower already at the end of the year. We've seen some rain last couple months, which have improved the outlook somewhat, but probably too late. The drought left trees with low energy, and earlier reports had strong branch growth, but poor cherry development. So we should be on the lookout for that over the next couple of weeks. And finally, the International Cocoa Organization, the ICCO, will issue a report in late February. They do quarterly reports on the global cocoa supply-demand setup. And their first estimate for 24-25, which is the current production year, that will come in this first quarter update. 23-24 last year was the third straight year with a global production deficit, where the world consumed more than it produced. In 21-22, that deficit was 216,000 tons. In 22-23, it was 64,000 tons. And then in 23-24, it was 478,000. And it looks like we pretty much, the trade is expecting another one for 25-26. Also, the stocks to grinding ratio for 24-25 at 27% is the lowest since 1976, when it fell to 19%. So we expect more focus to grow on this upcoming report as we move through the month of February.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.